Hey YouTube, this is Matt the Lawn Care Little Guy, and I hope you had an amazing Christmas. I got what I asked for Christmas. I got myself a GoPro. It's a used GoPro and it's an older model, but it's going to be way better than my phone. At least I'm hoping. And then with my Christmas money, I got some accessories for it. So I'm going to be doing a product review on a microphone, except you are actually going to be doing the review for me because I'm going to shoot this video with just my voice, just the camera's phone or the camera's microphone. And then I'm going to hook it up and then let you hear the difference, and you give me the feedback and you tell me what you like the best. So stay tuned for the intro, stick around for the video, and we'll see you then. Okay guys, so on to the product review. I got this microphone based off of another YouTube video. I was doing some research, and you know, if you're into YouTube, you're always going to YouTube for everything. I'm no different. I did the same thing, and this is the microphone that seemed to be what was a good recommendation, and it is, the product name is Ceramonic, and I will actually link the address into the description so you can go check that out. But it is a lapel style microphone, and it just plugs right on into the side of the GoPro, and it's really small. It's really tiny. It's not this big old massive thing. It's about the size of one of those dot candies that you might buy at the movie theater, and it seems to be pretty decent quality. I am always a little bit scared that it's gonna, that's gonna bend a little bit. It kind of feels flimsy, but at the same time it's really firm, so I think it's gonna stand up, honestly. So acknowledge the or recognize the quality that you hear right now off of the camera's microphone itself, and then I'm going to plug this in and you can hear how it sounds with this microphone. Okay, and so here we go. All right, does that sound any better? Give me a comment below, tell me what you think. This microphone was about $40, okay? And from what I was, from my research, what I was finding out, or what they were telling me, was that anything less than 40 bucks, it really isn't going to be a very good microphone. Now, if you guys have any other suggestions, let me know. That's less than 40 bucks, because I'm really cheap. I'm always trying to get things on the cheap, and if there is a good microphone that would provide this kind of quality, let me know, because I'd like to buy one for the iPhone that I have to record on. And maybe even my current phone. I've got a LG phone that I do some footage on, as you guys know that. So yeah, there you go. I've actually already been reshooting this, so I kind of understand the quality and I already have an opinion of it. So I think you could probably agree that the quality is better. But if you're looking for a microphone, I would say this is probably a pretty good option. The cord is about 4 to 6 feet long. I just didn't measure it, but it's pretty long. I don't know if it's as tall as I am. I'm not 6 foot, but it's about 4 to 6 feet long, and I think the quality is good. And then it also comes with this rabbit foot. That's what I'm calling it. Little fuzzy little troll looking thing maybe, and it goes over the microphone for those windy days, so it's supposed to buffer the wind. And I haven't had a chance to try that out, but I'm sure that when I get out on the job and it's going to be a windy day, as it always is in Oklahoma, you will be able to tell whether or not I'm using this or not. At least that's what I'm hoping. So overall, I think I like it. It is more than I wanted to spend, but I believe it when you say that you pay for what you get, or you get what you pay for. So far, I'm pretty cool with it. I might get another one, I might not. Tell me what you guys have been using in the past for microphones and how happy you've been, and maybe I'll take your advice as well. But I would recommend this. I think it's serving the purpose, and I'm glad I bought it. So on to the next segment. Okay guys, so what about taxes, right? How does a little guy do that? Right, I've done some videos on this before, and I'm going to show you something that you may have seen in the past, but maybe if you're a newer viewer, maybe you don't want to go all the way back and be looking at all the videos, because there's a number of them, right? So just being the time of year, I'll just show it again. I don't mind at all. But what I've done is I've actually created my own worksheet that I've been using for basically almost 3 of the 4 seasons I've been in business, and I actually recreated a form that my tax guy gave me, and he said, if you can hand me this with all your supporting documentation, then this will be the cheapest possible way that you can get your taxes done. And basically what it does is it consolidates all the information of all my income, all my expenses, and then it creates numbers, total income, total expenses, and it categorizes those expenses into a Schedule C, is what you may have heard or not heard about. But if you're a sole proprietor and you're filing your taxes on a Social Security number, I'm not sure all the ins and outs of Schedule C, but I file on my Social Security number as a sole proprietor, and I use a Schedule C, and what it is it's business deductions. Okay, so anytime you hear me say expense, that's actually equal to a deduction. Okay, that's the biggest topic right now is deductions. What is a deduction? What can I write off? What can I not write off? Well, I hope that I can tell you that today in this video what I, the little guy, and what my tax guy considers a business deduction. And basically what it comes down to is if it's a business expense, then it is also a deduction on your taxes. Okay, so if it's a cost of doing, this is another term, a cost of doing business, then it will also be a business deduction. Okay, so what qualifies, what doesn't qualify? Well, if it's a cost of doing business, then it qualifies to be a deduction. Now, what is a deduction, guys? A deduction is not the same as a credit. Okay, there's tax credits and then there's tax deductions. I'll start with the deduction. What does a deduction do? What a deduction does is it lowers your income. So let's just say you took in $100,000. Okay, but your deductions equate to $30,000. Well, you take $30,000 in deduction, or a deduction in what income is allowed to be taxed by the government. Okay, so only $70,000 of that $100,000 that you made will actually be taxed. Okay, that's all that means. $30,000 does not get given back to you. It just lowers your income to where a smaller amount is taxed. So you save the tax on that $30,000, not the $30,000. I hope that's clear as mud for you guys. If you have any questions, just put it in the comments. So how does that differ from a tax credit? A tax credit is dollar for dollar. For instance, here's an example. A child tax credit. I have 2 kids. The child tax credit, I believe, is $1,000 per child. So when I file my taxes and they're going through my income and my deductions, my income goes higher and it goes lower, it goes higher and it goes lower. When a tax credit, the child tax credit, is applied to my taxes, it actually credits me back $1,000, 1,000 whole dollars, not just the tax value of that $1,000. I don't save my tax rate of $1,000. I save $1,000. It's dollar for dollar. Deductions are not. Deductions, you save the taxes on those dollars. So if your tax rate is, well, just for easy numbers, is 10%, and you make $100, 10% of $100 is $10. You don't pay $10 on that $100. You do not get the entire $100 back. Unlike a tax credit. A tax credit, you get the entire $100 back. So, big difference. So, that's why I don't, at the end of the year, I don't go on a big spending spree necessarily unless I really need something. Now, I don't worry too much about what year I spend it in. Now, I'm not a startup anymore, because in a startup, you can actually claim a loss on your business and be non-profitable. You can actually even go in the hole, okay? And that's what expenses are. You can actually spend more than you take in, and the government says that's okay, all right? That's not true all the time, especially when you're going into your 5th year of business like I am. So you want to show that you're making a profit, otherwise you're just a failing business, all right? I only buy the things that I need, and I don't worry about which year, because if I don't get it deducted in 2018, I'll get it deducted in 2019. Not that big a deal to me. So that's kind of my perspective on taxes and spending at the end of the year. Everybody's situation is going to be a little bit different. The laws are favorable to some, where they're not as favorable to others. So know your personal situation and know how the laws apply to that. But that's the little guy's perspective. So if you're ready to see the database, I'll go ahead and show that to you now, and I'll show you different categories, and hopefully this will kind of define or help you to understand what exactly you can deduct in your business. So we'll turn around. All right, this is my consolidated sheet. It's broken out by months and even weeks. Each one of these is a different week. 1, 2, 3, 4, 5. Sometimes you got 5 weeks of income. All right, and then you got all the months, January through December, and everything's totaled up. I just created this database, and it's all auto formatted. So when I put a number in there, like watch this, I'll go right here, and I'll just say $100, right? Oh, bam, $100 goes down right there. All right, and then I've even got my net monthly income and even my tithe amount. And then if I throw an expense in there, let's just say I spent $10. Bam, there it is. Now my net income is 90, anyways, it's just total all up. So what this does now, see, I put $10 of expense in here. What I do is I told you I recreated my Schedule C worksheet that my accountant likes to use, and it auto-populates. Oops. Actually, it doesn't auto-populate off of that necessarily, but I actually have to add an expense because I got an expenses tab in here. There it is. All right, but I didn't put that $10 in there. But if I did, I would have to categorize it in my expenses, and these are the categories. All right. So you got advertising. Advertising could be a business card. Advertising could be flyers. Advertising, the ink you spend on flyers, all that type of stuff. Anything you use to get the word out about your business is advertising. Equipment rental. If you do aerating but you don't own one, you can go rent that sucker and you can deduct it. Insurance, paying insurance. Legal fees. If you got like a lawyer on retainer, or if you get yourself in a bind, you got to get representation. Meals. Here's a hot one. Meals are not necessarily deductible unless it's a business expense. Now I'm going to turn the camera around a minute. This is the way my accountant told me. He said, everybody's got to eat, right? Everybody's got to eat. They eat lunch, but it's not necessarily a business expense. If you're just at work and you're going to have lunch and you decide you want to go to McDonald's, that's not deductible. It's just lunch. Okay, the government is not obligated to feed you your meal while you're at work. They're just not. Now, if you're a business owner and you decide to throw a luncheon and you're going to pay for everybody, say you're going to cater it in or something like that, or if you're going to do like a morale type of thing, like a good job, pat on the back for all your employees, and you decide you want to take them out for a steak dinner, or you want to cater something in, that is deductible. That is a business expense. You're throwing a shindig for your people. All right, it's not just you personally eating lunch. Okay, that's the way my accountant told me about that. Also, like if you go to the GEI, your meals are deductible. It's a business trip. It's deductible, okay? Unless you get some kind of reimbursement, but you as your owner, you're just reimbursing yourself. But that's a business expense because you're on a business trip. You can deduct all of that. I hope that clarifies the meals part. Office expenses, anything you use for your office, printer paper, printer ink, actually, I set that up in advertising, but I guess there's a little bit of delineation. You could probably input any which one you want. Parking, if you're downtown, like let's just say you're going to apply for a license downtown or at the county or whatever, you got to pay for parking. There you go. Licenses and permits. I'm fixing to get my spraying license. I'm going to deduct it right here. Uniforms, if you're going to buy shirts with your name on it, anything branded that's for business use, you can put down there. Bank fees, if you got a business account, and you're paying the bank to do your business, your banking business, handle your money, you can deduct that. Repairs on equipment, we all going to have those. That's probably going to be a pretty high number. Workman's comp, you can deduct that. Professional, that's a fuzzy area. Pro gear, I don't really know about that. Maybe you guys can comment and tell me more about that. Entertainment, that's if you're gonna, here's another one. You're not treating your employees to a lunch. What you're doing is you're taking out a potential client and you're going to schmooze them a little bit. Entertainment, right? You invite them out to lunch. Hey, let me pay for that for you. Entertainment, okay? Maybe even the GEI could possibly even be in that area. But that's also a gray area where I think a lot of people like to schmooze it. I've heard that if you just mention your business once, then that's a business expense. But it's unprovable. To be honest with you, it's unprovable. So you got to be honest. Okay, entertainment. You got dues and subscriptions. I'm going to be using Yardbook next year. Well, there's a paid version. I can deduct that. Tollways. If you're traveling for your work and like I'm going from Oklahoma to Texas or something like that, and I'm going to use the turnpike, tollways. If it's for work purposes, you can do it. Telephone. Do you have a telephone that is for your business that you use? You can deduct that. Hey, here's another thing. You've heard it said also you can deduct square footage on your home. Same thing with your phone. If you're using your phone or your home or any asset like that for dual purpose, where you have personal space and you have business space, or you're using personal phone as a business phone, it is true that you can deduct a portion of that bill off, but here's the trick. You have to be able to determine how much you are using of that asset towards your business, and there's a formula for that. And this is what my accountant told me. He says, if you want me to figure that out for you, it's going to cost you. I don't blame him. He's trying to make money. He's trying to run a business himself, right? He ain't going to do nothing for free. I don't blame him, but it's the same thing. You could actually just let it go. And what my accountant told me, he kind of asked me a few general questions. He says, how much of this do you use for that? How much do you use that? And then what he told me, he says, you know what? He says the deduction probably is not going to be worth what you're going to pay me to do it. So I let that go. I do not estimate all that. But that may not be true for you. Maybe it's more significant for you. You can deduct some square footage off your home. For instance, if you use half your garage to store your equipment, 50% of that space in your home might deduct. Maybe you got a bigger garage than I have. I don't have a very big one. Or maybe you're just constantly using your phone more so than even for your personal. Hey, maybe you should deduct that. But you got to split it. If you're going to use dual purpose, you're supposed to split it. You cannot deduct the full amount. Okay, and on to small tools. Small tools, anything like rakes, hammer, anything like that. Subcontractors. This is where if you're hiring somebody just for the day and you're going to 1099 them, you can deduct that. If you pay them, let's just say $150, $200 that day, you can deduct that. That's a subcontractor fee. Okay, that is a cost of doing business. Labor is a cost of doing business, but if they're not a direct hire for you and they're actually a subcontractor, you're going to 1099 them. All you need is their name and their address. That was what my accountant told me. There might have been one other thing, but I think it's just his name and address. And basically all they do is they send them a 1099. Your accountant will do that for you. Fix up a 1099, you just tell them how much you paid them, which you got to keep track of that, and then they mail them a 1099, and they're supposed to claim on their taxes. But you can deduct that as an expense. I've been paid before, and I don't know if they're 1099 me or not, but they didn't ask me those questions, and they're losing a deduction. And that's one reason why I will not pay people under the table. If I do it, I will not do it. I will 1099 them so that I can deduct it. You're taking money out of your own pocket, even if it's $100. Let's just, like when I cut my finger, I used a guy for nearly half the season. I paid him probably $1,000. I had to pay tax on that because I claimed it as income. The money I got, I claimed as income, but then I paid money to that guy, and then I'm getting taxed on that. I could have deducted that from my income. You know? So anyways, I wouldn't pay people on the table. Subcontractor, that's a big one for a lot of us, especially if you're a solo guy and you need help sometimes. Don't pay taxes on that money you pay them. Just don't do it. All right. A couple other categories here is materials. If you're doing like mulch and things like that, which most of us are, that falls in the materials category. Okay, and then other expenses. What do I put in other expenses? I put things like equipment gas, my Stripe, because I use Stripe to process my credit cards, so I get charged for that, and I put those fees, I put those charges in the other expenses category, so I deduct my credit card fees as well. So it doesn't really bother me too much that they pay for it. It's usually only like, I think the biggest one I've ever had is like $5. I'm not sure. I can't remember. But it's not that much. But that's one of the things at the end of the year that I need to do is I need to look and see how much I'm actually charging people for that. But that will never be a credit. I will never get all of that money back, but I will at least save the tax on those dollars. So anyways, landfill fees as well. You know, you go to the dump and around here you got to pay for landfill. That also goes in the other category. Basically any other thing. Okay, so moving on down through the Schedule C, there is another category which is very important to the taxes, and that is, where is it? Come on now, get up there. If you deduct, automobile expenses. Here's another thing that's very similar to your house and square footage and your phone. Okay, if you're using a vehicle for dual purpose, personal and business, then you will not use this area. That's why I have this, weird Cubert looking junk going on right now. It's because there's nothing in there. Okay, there's nothing in there. The reason why is because mine is dual purpose. I do not itemize. I do not deduct actual expenses. What I do is I claim a flat rate. Where is it? Miles during this period. Okay, I just put if you deduct miles, not actual expenses, all you got to do is keep track of your beginning mileage, which is January 1 and December 31st, and you get a total mileage. So where do you get the credit from? Well, the government pays you, or gives you, gives you a deduction of 55 cents per mile. And that 55 cents per mile, or 55 cents times the number of miles you drive for business, which you'll have to keep track of, as opposed to personal. I keep a daily log. Each day I put the date and I put the start mileage, the stop mileage, and then, just segregate it that way. And then at the end of the year, I get a total mileage that my accountant uses. So this is my odometer reading, right, that I'm going to put right there. So that would just be total mileage, but it doesn't segregate it from personal to business. So I keep track of my business miles. So he deducts that total mileage that I segregated for business and multiplies it by 55 cents, and that's my deduction. The way that's different is if you use a vehicle only for business, then you would make it itemized, okay? I'm going to turn this back around and show you those categories for itemized automobile deductions. Only if it's single use, business use only. Then you can deduct your fuel. So you keep track of your receipts for your fuel. Every time you go to the pump and fill up your tank, you keep track of that receipt. Repairs and maintenance, anytime you change the oil, put tires on it, new shocks, anything like that, you keep track of that receipt and you add it up and you put it in that column. Insurance, you can deduct all of your insurance for that vehicle. It doesn't have to get split. Your registration for that vehicle, everything. And you can, even if you have a loan on that vehicle, you can deduct the interest paid on it. So that's a pretty good deal. It's more record keeping to actually keep a vehicle for business use only, where it's much easier to just claim mileage for business and personal. But that 55 cents a mile is supposed to cover all your maintenance fees, all your gas, anything that has to do with that business. It's just a straight flat rate. Mileage times 0.55. That's it. And then there's another thing here. I have list of assets. So how is that defined? That is equipment and tools, etc. of $500 or more. So I list those out separately. This particular time I bought a Toro walk-behind mower on that date, and I paid $975.36 for it. Okay, so that's actually separate. When I'm up here and new equipment, where is it? Well, anyways, if it's $500 or more, I put it in that column, not in the above category. So, and then what happens also is I have it set up to where if it's $2,500 or more, then it'll get depreciated over a period of time. But if it's less than $2,500, then I take a flat deduction that year, and then I don't get to deduct that equipment anymore the rest of that. So that's another thing to remember too, is you have to decide how you want to work that, and whatever's going to be most advantageous for you, that's what you should do. And you should just ask your tax guy about that. Trying to think of what else here is going on. Automobile expenses, odometer. Leasing or purchasing, right? Here's another one in the vehicle. It says, is the vehicle leased or purchased? I haven't dealt with that very much because my vehicle is both personal and business use, so I don't lease anything or purchase. I didn't deduct the cost of my truck. I bought it. I didn't deduct it. And the reason why is because I just get a flat rate. I chose that. But if you bought one, the deduction rules make a difference as opposed to whether or not you're leasing it. Now, don't take me at my word on this, but I'm guessing if you bought a vehicle, you would have the choice to depreciate that over a period of time and deduct that every year. And that's probably the way I would go, being that it'd probably be over $2,500. But if I leased it, I bet you, I'm not sure, you'd have to ask your tax guy, but I bet you can deduct the fees for leasing, your monthly payment on your lease. each and every single month. So that probably adds up pretty good, and you can probably continue that every single year you do it. It doesn't depreciate. It's just a cost of doing business. So those are the categories. So what can you actually deduct? If it falls in one of those categories, then you can deduct it, and you'll find that on the Schedule C that everything you do will fall into one of those categories. So what is deductible? Everything. If it's a cost of doing business, then it's everything, okay? But there are some rules that govern certain things. Like I said, square footage in your home, your phone bill, if you're splitting it for personal and business use. I hope that's helpful. I hope you enjoyed this video. So stick around. Tag time is coming up next, and I hope you do. Well, thanks for sticking around for tag time. This is still a pretty new segment, so I'm still kind of getting used to, it's funny how communicating different topics actually creates a different comfort level, but this is just something I really want to share with you guys on a regular basis, and I hope that I can get more comfortable talking about this with you guys. But anyways, again, my time alone with God is what TAG is. TAG, time alone with God. And the topic of this week is going to be Joshua 5 verse 6, and I'm going to read it to you guys, and then I'm going to tell you what I think about it. So Joshua 5 verse 6, for the people of Israel walked 40 years in the wilderness until all the nation, the men of war who came out of Egypt, perished because they did not obey the voice of the Lord. The Lord swore to them that he would not let them see the land that the Lord had sworn to their fathers to give us, a land flowing with milk and honey. So I bet you that kind of sounds a little bit like some gibberish, so I'll have to give a little bit of background on it. But the background is basically Moses has transferred the authority to Joshua so that people would look at him as their leader, as one who's hearing from the Lord, and they're getting ready to go into the promised land. But the problem happened was sometime before that, the people actually rebelled, and they started worshiping other gods, the golden calf, if that sounds familiar to some of you. And what the Lord said was, like, he said not any of them were going to see the promised land except for Caleb and maybe one or two other guys. Which is funny because I actually named my son Caleb after Caleb of the Bible because of his integrity, because of his faithfulness, just a number of different things. I love that character. And he got to see the promised land, but everybody else from that generation actually did not get to see it. So what had happened, that's what it's talking about, is that everybody's now gone, and now the Lord is ready to bring the Israelites into the promised land. And the thing that kind of stuck out to me about that is it was kind of like, it was disobedience pretty much on the part of the Israelites, and that had consequences. And I think about all the things that we do in our life that we just don't really quite fully understand the consequences of their actions. Because what if the Israelites knew that God was going to react like that they wouldn't get to see, that they're going to wander around in the desert the rest of their lives, and that's where they were going to die, and they would never see the land that God had promised to them? Do you think they would have still worshipped that little golden calf? I don't think so. And I think that many times those little things in life matter, and we don't always see the consequences or understand the consequences of our actions. But it's very, very important that we do understand that the things that we do matter, the things that we say matter. And I just want to make sure that everything that comes out of my life, and there's many things that need to be changed in my life, which is why this verse is applicable to me, is because I want to know that everything in my life matters, whether it's small or big, or whether I see the consequences now or later. But I want to live a life that allows me to experience the blessings of God. I want to live a life that allows me to rest in God's presence, that allows me to have closeness with Him, so that I might live a life that is full in Him, and I might experience the blessings and know the love of God every minute of every day for the rest of my life. Because these folks did not actually get to see the blessings of God. I don't know what their life was like, but if you could imagine wandering around in what we call the desert, now they were still blessed in that their sandals didn't wear out. They still had food. They had manna that they got to eat, which manna is still kind of an unclear thing, but they didn't get to eat real food. Could you imagine that, eating the same thing for 40 years over and over and over again? And you never really get to taste the good food. You don't get to eat of the ground because there's nothing there, and it's just, that's not. I don't see that as blessings. The blessing is just that they got to live, really, and they got to have another opportunity to worship the God of what they call their fathers, Abraham, Isaac, and Jacob. And that's all that really matters, is relationship with the Lord. But obedience plays into God's ability to bless us. Not that he's not able, but just knowing that everything we do, our lives matter. Everything we say, our words matter. So I hope, my prayer for myself and my prayer for you is that you can look at yourself and desire God's blessings, desire a relationship with Him more than anything else on earth, and that you'd have a greater realization, greater sensitivity to the world around you and how your life can make a difference, either good or bad. So anyways, I don't know how clear or unclear that is, but I love to talk about this stuff. It's always an ongoing conversation, although it doesn't happen on YouTube. But also, follow me on Instagram if you want. I'll put the link in the description. I've also got a Twitter account now, so I'll put that link in the description as well. There's not very much content on those yet, but I hope to put more, and probably even more faith-based stuff. It's going to be more diverse than even what you see here on YouTube. So anyways, pray for me. I'll pray for you. Lord bless and peace.